What they do is they have these cloistered people up in New York somewhere or Boston, and they have loads and loads of marketers and salespeople, and then they have investment advisors that work for different companies that sell to you, but sell their services. There's layers and layers and layers of people out there, and they're taking upwards of more than $100 billion a year they take out of your savings, and that costs people their retirements. And they don't even talk to those people. They don't even know, what their goals and their dreams are. It's all a bunch of crap, to be honest with you. It doesn't work. The big companies like Merrill Lynch and Morgan Stanley and all the other big banks, they're afraid of getting sued by you. So you know what they do? They've come up with this modern corporate finance theory. They come up with Monte Carlo simulations and all these words that you have no idea and shouldn't have any idea about, and has nothing to do with investing and savings. But they tell you that it does, and if everybody does the same thing and they tell you the same advice, nobody's going to get sued. And that's what happens. It's a race to the bottom, and only people that are getting wealthy are the brokers and the financial advisors and the mutual fund managers and the other portfolio managers and the executives at these places and the traders that make the commissions off of buying and selling to each other. They're the ones that get fearful when the stock market goes down. They're the ones that get scared. Why? Because they know that you might take their money away from them. And none other than Warren Buffett says it the best way, okay? Why do people tell you to sell, or they do it for you, when everybody else is selling, when you would never buy hamburger meat that way? Let's say that you were let's say that you're going to buy hamburgers every day for the rest of your life, okay? Now, if you were a consumer and you want to buy hamburgers, you don't want the price to go up, right, every day? You want the price to go down so you could make sure that you get the best value when you pay for it. Why does the financial services industry do exactly the opposite and tell people exactly the opposite? They focus us on the stock market going up and down every day and all this news. We talk about all these things that are irrelevant to the businesses that people are supposed to be investing in. What happens? So you buy hamburger when the price goes down. That's the same way you should buy businesses. When they go on sale, the best way to stockpile and compound your wealth is to buy when they go down. And that's exactly the opposite of what they do for you, and is exactly the opposite of what you should do.